This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview is for the week of January 26th through the 30th. Charles Roplet, our senior market analyst at Zacks.com, puts this report together for us every week. So earnings are coming in pretty hot and heavy now. More than 400 companies have been confirmed to report this week. Of them, about 131 S&P 500 members. What do you think? Have analysts finally ratcheted down their earnings expectations enough yet?
We'll know more by the end of this week. We're going to have a lot of large caps reporting, 11 Dow components. As you said, we'll have more than a quarter of the S&P 500 reporting. So we'll actually have a better idea. When we look at earnings to date, a lot of them have come from the financial sector. One thing, though, that's interesting, when I actually look at what the trend and estimate revisions are for the company reporting this week, very few actually had any positive revisions to the quarterly estimates. More so, we saw a lot of analysts actually cutting their forecasts heading into earnings reports, not for 2009, but we're talking for the fourth quarter. So the bar is still being lowered. Obviously, at some point, you think the bar would be lowered enough to where companies would be able to jump over it. But I think there's going to be cases even where a company might surprise by 1 or 2 cents. Their guidance will be murky at best, or perhaps even actually worse, where they're cutting your guidance. So you could have a case where maybe earnings were a little bit better than people thought, but then their guidance is worse than somebody thought. So you still don't get that positive benefit from a earnings surprise. So I think it's going to be a very tough quarter. Probably the worst quarter we've seen in quite some time for earnings.
Common theme, though, seems to be weakness is spreading, correct?
Oh, absolutely. And, it's just an economic cycle. And any time you have a recession, it's going to affect all industries. And that's what we're seeing right now. Certainly we talked right before you were taping this about Caterpillar cutting jobs, Deere's cutting jobs, Pfizer's announcing it's cutting jobs. So that this morning as part of its closing deal with Wyeth. We're recording this on Monday for people watching.
Right.
It's a recession. We're going to see more job cuts. And even after the economy starts to rebound, we'll see unemployment continue to rise. Unemployment's always a lagging indicator. Companies cut too late and they hire too late.
That's an interesting point. So just because companies seem to be cutting too late in the cycle, does that necessarily mean things are getting worse, or they're just have a bad reactionary time?
No, I think things are getting worse, but you are seeing more companies announce layoffs, and I think they're in reaction to the news. Things are definitely getting worse. We expected things to get worse. The big question is, do we start getting a sense that a recovery could happen in the second half of the year? Right now, that's anybody's guess. And as I've said before, people who are pretty adamant or say, yes, a recovery will happen by this date, I think they're trying to act very confident when the reality is they don't have any data to make a firm guess off of it. Obviously, again, I'm optimistic. We might start seeing signs of recovery late half of 2010, late 2009, perhaps early 2010, but we really will have to see how the economic recession plays out and what kind of stimulus package we actually get passed by Congress and how quickly it's implemented. So a lot of ifs.
Yeah. Really. What kind of an earnings decline are you looking for 4Q? Street's looking for down 20%.
Yeah, it really depends whether you're looking at top down, if you're looking at bottom up, or you're looking at net income. Previously, we were actually looking for a slight increase in per-share earnings. We've seen estimates being cut widely and across the board. It's interesting. When we look at the consensus estimate 2009 for the S&P 500, I've seen approximately a $30 drop in the consensus estimate. It's about a 50% drop just since November. So again, I think when you look at fourth quarter earnings, we should really see what earnings look like this week, kind of put those into the mix. We actually have a better mix of actual reported companies in terms of industry diversification, whereas before we had a pretty limited group that people are trying to make their forecast on. It's definitely a moving target. We're seeing analysts continuing to lower estimates. So I think any forecast you saw even 2 weeks ago is suddenly becoming a little bit outdated.
Fed meets on Tuesday and Wednesday, announcing something on Wednesday. You're looking for rates to be unchanged, huh?
Yeah, it's not going to be really any surprises there. They said at the last meeting their target was 0 to 25 basis points. That's not going to change. They have said previously they're looking at buying agency-backed debt, possibly looking at some other government debt as well, probably looking for some more insights on what they're actually planning to do in terms of trying to prop up the system in terms of boosting liquidity. And obviously they can do that through buying some debt. There's been some talks about doing some type of swaps with the Treasury Department. Possibly we'll see something about that. But in terms of interest rates, we're not going to see interest rates change at this meeting, probably not the March meeting either. So right now it's really a question of what else is the Fed going to do to really put more liquidity into the system.
I still think they're just going to order pizza and just have a party.
Quite possibly so.
For lack of anything better to do. Other economic news on the docket for this week that's going to weigh on the markets?
We will have some GDP numbers at the end of the week. That will add to the volatility. I said in a written piece we're actually near Dow 8,000. I'm watching that very carefully. I'm nervous about it. If we do get a rebound off this level, it'll be very positive, but I expect it to be another volatile week. And considering we're right at critical support, it's something that investors need to tread with a little bit of caution. We start off this week on a positive note. The markets open Monday morning on an up note. Obviously, by the time we're recording,
could all change.
It could all change. So we'll just have to see how the week plays out and how people react to earnings, how people react to the Fed, and how people react to some of the economic data that comes out. And we'll see where we end up.
All right, fair enough. Well, Charles has actually outlined a couple of companies that could have positive earnings surprises. That's a surprise to me, given all the bad news that's been out there lately. You'll want to go to the text version of his earnings preview piece in order to see those two companies and get more on a company that could surprise to the downside as well. All you need to do is go to Zacks.com, scroll down the homepage until you get to the headline next to his picture. It says earnings preview for the week of. And then you click on that, it'll take you right to it. With Charles Rotblatt, I'm Terry Ruffalo.